So with that, I would start my presentation.
Yes,
So, Mr. Srinivas Gupta ji, can you see the screen, the
Yes, sir, yes, sir.
PowerPoint presentation? I
Yes,
hope
sir,
it is clear and visible.
it's clear
If
and
there is
visible.
any technological problems as we proceed, please feel free to stop me, and we will carry on the presentation and discussion in the larger interest of our members who have joined.
So Manoj sir, I am leaving, sir.
Yes, sir.
I am
Yes.
attending some. Thank you, sir.
Yes. Thank you very much, Devraj Reddy ji.
Thank you.
So, friends, as our earlier speakers had also mentioned, we are today following a new code of ethics. New code of ethics issued by the International Ethical Standards Board of the Internet, which is promoted by the International Federation of Accountants. International Federation of Accountants is, as you know, the global body representing all accountants worldwide. Our institute is one of the founding members of International Federation of Accountants, IFAC as it is called, and IFAC has supported the International Ethical Standards Board, the IESBA, the International Ethical Standards Board for Accountants, ISBA, has come out with a new code of ethics in 2019. Our existing code of ethics, which the institute adopted in 2009, was based on the earlier version of the International Code of Ethics of 2005. Now what we have adopted is the latest code of ethics as issued by the international body in 2019, and we have adopted it with effect from 1st of July 2020. Some of the provisions relating to the new code of ethics have been deferred by the Council of the Institute. Otherwise, all other provisions have been implemented effective 1st of July 2020. So, while those provisions have been deferred, it is still important for us to know what those provisions are, and therefore, based on that, because at any point of time in future, the Institute may implement these provisions, and therefore we should spend some time to understand those principles, even though they have been deferred. So now we have our code of ethics spread in 3 volumes. Volume 1 is the International Code of Ethics of 2019. Volume 2 is containing the Chartered Accountants Act, the Chartered Accountants Regulations, and the various announcements of the Council of the Institute. And volume 3 is the disciplinary cases, the various cases which have been the various decisions of the disciplinary committees confirmed by the appellate authorities, including the High Court and Supreme Court, are contained in volume 3. So that is how our new code of ethics has been structured. Now, friends, this new code of ethics, I must compliment our council and the Honorable President, Vice President, the Chairman of Ethical Standards Board, CA Kemisha Soni, and the entire team. We CA Ranjit Agrawal, who was the chairman last year, and CA Sanjeev Chaudhary, who was chairman of this board from 2016 to 2019, and who currently represents our institute in the International Ethical Standards Board. So all our council members have spent enormous amount of time. We are very happy that our institute has now implemented this code, and therefore we can hold our head high and say that our code is no less than what is the ethical principles being followed worldwide. Now, friends, with that, let us start our discussion on the first volume. There are 5 important changes which have happened in this code if we compare to what code was prevalent as per 2009 International Ethical Standards Board code. So between code of 2009 and 2020, there are 5 important changes which have taken place, and out of these 5, So there are two matters which are still applicable to all of us, but 3 out of 5 have been deferred, and the new date for implementation of these codes would be separately announced. So what are these 5 major changes? First is responding to non-compliance of laws and regulations. This is applicable to the auditors of listed companies and those chartered accountants who are working in the listed companies. So friends, for majority of us who are not auditors of listed companies, this provision will not be applicable to us. Those chartered accountants who are not employees of listed companies, to them also this provision will not be applicable. It is applicable only to the auditors and employees of the listed companies, and even for them, the implementation has been deferred for the time being. Second important aspect is that there is a new kind of a restriction being brought in with respect to taxation services given to the audit clients. Now, this new provision has also been deferred. So this is not applicable now, but it would be important for us to understand what kind of taxation services are proposed to be proposed not to be given to an audit client. So this is the right time for us to understand, and if we are rendering those kinds of services to our audit clients, we have time to ensure that we work out a mechanism whereby our clients are not put to difficulties. Then friends, the third part is there is a prohibition on management responsibilities to the audit clients. This is not far different from whatever ethical practices we are following. We have always followed a system that the internal auditor cannot be the statutory auditor of the same entity. So internal auditor and statutory auditors have to be different. The statutory auditors cannot do bookkeeping and other services. These are principles which we have been following, right? I may say from 1949 when our institute was established, and maybe even before that when our profession had already taken its birth in our country. You will be surprised, friends, that in the year 2000, when the very big US company, namely Enron, which underwent a lot of financial and accounting scandals, and when Enron collapsed, the government of US brought in the Sarbanes-Oxley Act, SOX as it is called. And it is only when the Sarbanes-Oxley Act was introduced that in the US it became necessary that statutory auditors do not undertake the internal audit of the same entity. In other words, friends, our ethical principles have been far more robust, and even from 1949, we were following the principles that the statutory auditor is not the internal auditor. Whereas these restrictions came in a developed economy like United States in the year 2002. In other words, the ethical principles which our profession has been following has been of very high standards. In light of what robust and very strong checks and balances which are there is some more guidance which we are now taking from the international ethical standards when we say that there will be prohibition on management responsibilities to an audit client. As you know, friends, under the Companies Act 2013, there is a section 144 of the Act. Section 144 gives those kinds of non-audit services which cannot be discharged to an audit client. So we have all those restrictions in our code of ethics, in our law, but in a different way. This is coming in our new code of ethics by way of prohibition of management responsibilities to the audit client. So we should understand what is the management responsibilities and to what extent they would be applicable to us. Friends, the fourth part is that today we have a self-regulatory measure. It is a self-regulatory. It is not binding. It is in a way suggestive. We are supposed to follow it, that we should not have audit fees from one client so much so that the world, the society believes that we are so much dependent on one client that our ethics are being compromised, our independence is being compromised. So imagine a situation, if I have 100 clients and I am getting say 10,000, 20,000 rupees from 100 clients. So no client will be in a position to dominate me. And if something is happening in the working of one client, then any one of us can say, sorry, we are not interested in your work, we will not do it. That is our independence. Now what happens, friends? Even if we have one client and we follow all ethical principles, the society at large, the world at large, will think that, okay, if Mr. Fadnis has only one client and that client is annually giving him, say, 25 lakhs or 50 lakhs of fees and he has no other client, then how far is Mr. Fadnis independent of that audit client? So while you and I can still remain independent, because independence is a state of mind, but possibly the people at large will believe that this person is not independent. And keeping that in mind, our institute has a self-regulatory measure which says that if your fees from one client is more than 40% of your total fees, then you cannot keep such clients. In other words, from one client or group of clients, same companies or same group, our fees should not be more than 40% of the fees, total fees. So we are not over dependent on one client. So this was in the form of a self-regulatory measure. Now, that in place of that self-regulatory measure, what is now being proposed, and I repeat, this has not been made applicable, and therefore what is being proposed is that if your fees exceeds fees, then you have to demonstrate your independence. You don't have to leave that client, but you have to demonstrate, and demonstrate by way of your audit working papers, your conduct, and say that and show to certain people who are referred to as those charged with governance that you are still independent. So this is important, keeping the faith and confidence which society at large has in terms of the services which chartered accountants as auditors are rendering. Friends, it is very important to remember that the duty cast on chartered accountants as auditors to certify, to express a true and fair view on the financial statements of an audit client is one of the very noble duties which we as a profession are discharging. We are certifying the truth and fairness of the financial statements. We have a contract between us as auditor and the auditee client. The auditee is paying us the fees and we are giving our audit report to the auditee. But it is the world at large which is relying on the work which is being done by us as auditors. So it is a three-way relationship. The auditor, auditee, and the world at large, which relies on the work which is done by the auditor and auditee. And to retain the importance, to retain the credibility of the profession, to re-emphasize to the society that we are independent, our services are valuable. As a profession, we must discharge our independence to the society at large. And in that context, what is now proposed is that if the fees is more than 15%, you are not required to leave that client, but you are required to demonstrate your independence in terms of that audit client. So we will deal with this as we go a little ahead, and you will find that actually it is giving more strength to small and medium firms, small and medium practitioners, and it is being perceived by many as defeating the cause of small and medium practitioners. But I, for one, believe that it is only strengthening the hands of small and medium professionals. But this is not being implemented now, and it has been deferred for the time being. Friends, then the fifth important change and which has been made applicable is in terms of having new independence standards. These are not different from what is being followed today, but all good ethical practices which are being followed have been codified at one place. So we should not take gifts and hospitalities from audit client. All those kinds of principles are being codified at one place in the form of independence standards. So these are 5 important changes, 3 of which have been deferred and 2 are being implemented or have been implemented effective from 1st of July 2020. Now friends, there are some other changes which are not fundamental changes but structural changes or say editorial changes that the word should is being used, and in that sense it connotes the mandatory nature of the standards. The independent standards, as I said, have been brought in a different category, and that there is more guidance given in the new code with respect to what are the safeguards which are required to be taken. If there is a breach, what is then expected of the audit firm to prevent that breach or to limit the damage, and what could be the remedial measures. So in that way, these are some of the principles which were already there in the 2009 code and which have been now codified in a better fashion in the new code. So as we move along, friends, you will find that the term used in the new standard is professional accountants and not chartered accountants, because that is how globally the accountants are known. Today we have chartered accountants. In some countries they are certified public accountants. In some countries they are also known as chartered management accountants, so on and so forth. There are different categories. In India, not only the Institute of Chartered Accountants of India, but also the Institute of Cost Accountants is also a member of the International Federation of Accountants. So professional accountant is a term which is used in the Code of Ethics as a generic term to define and describe all accountants in the code. Now, if you look at the existing Code of Ethics, friends, as I said earlier, it is in 2 parts, Part A and Part B. Part A is based on the International Code of Ethics of 2005. It had 3 chapters, 1 to 3, and Part B had our Accounting and Auditing Standards, Chartered Accountants Act, Council Guidelines, and Self-Regulatory Measures. So this is how the Part B was structured, and this is our Code of Ethics, which was applicable till 30th of June 2020. The new Code of Ethics, as I mentioned, is in 3 volumes. Volume 1 is with respect to the International Code of Ethics, and Volume 2 is our existing Code of Ethics. So now the Volume 1 is in 4 parts. Part 1 is what contains the fundamental principles which are applicable to all chartered accountants, whether in practice or in service. Part 2 is for chartered accountants in service, as it is called professional accountants in business. This is actually what we mean by chartered accountants in service. Part 3 is for those chartered accountants who are in public practice. So Part 3 is for practicing members, Part 2 is for those who are in employment, and Part 4 contains the international independent standards, and again these apply both to chartered accountants in practice as well as chartered accountants in service. Now friends, the new International Code of Ethics is binding and mandatory to us. Now how the Council has made it binding to us, has made it mandatory to all the chartered accountants, is in terms of powers given under the Chartered Accountants Act. Chartered Accountants Act Section 21 says that Section 21 and Section 22 deal with what is we know as professional misconduct. So Section 21 read with Section 22 says that a chartered accountant will be deemed to be guilty of professional misconduct if any of the provisions contained in the first schedule or second schedule are not adhered to. So we have 2 schedules, first schedule and second schedule, and under the second schedule, Part 2, Clause 1 gives the powers to the council and says that a member of the institute, whether in practice or not, shall be deemed to be guilty of professional misconduct if he contravenes any of the provisions of this act or the regulations made thereunder or any guidelines issued by the council. So compliance with the act, compliance with the CA regulations, and compliance with the council guidelines is mandatory for all chartered accountants. And if we do not follow these guidelines or the act and regulations, we would be held as guilty of professional misconduct. That is what the law says. And now the council of our institute has issued the IFAC Code of Ethics, the International Code of Ethics, as a guideline. Once it is issued as a guideline, then compliance with that becomes mandatory under the Chartered Accountants Act. And if it is not complied, the institute can take disciplinary action against the said chartered accountant. And therefore, friends, both in law and in spirit, we must ensure that we comply with the Code of Ethics. Now, let me first deal with what is the provisions relating to no CLAR, that is responding to non-compliance with laws and regulations. Let us understand the conceptual requirement to comply with the laws and regulations. We say chartered accountants are the best brains in the society. Chartered accountants are an elite class of society. Chartered accountants are partners in nation building. Our institute is partners in nation building. In the inaugural remarks, our worthy past president Devraj Reddy Garu mentioned that he referred to doctors, government officials working in COVID-19, and in that context he said, why chartered accountants cannot work? Because very rightly what he brought out is that chartered accountants are, and that is what we expect from our members, that they should follow the best and the highest ethical principles. Now, if I am an auditor of a listed company, this is in no CLAR, or this provision of non-compliance with laws and regulations is, as I said, applicable to the auditors of listed companies, and it is applicable to the employees of the listed companies. Now, friends, for auditors of listed companies, if I'm an auditor of listed company and I come across non-compliance with laws and regulations, if my audit client is not complying with certain major laws and regulations, then what is my duty as an auditor? And friends, what are the kinds of laws and regulations which are referred in this provision? Non-compliance with fraud, corruption and bribery, money laundering, terrorist financing and proceeds of crime, data protection, tax and pension liabilities and payments, environmental protection, public health and safety. These are the kinds of laws and regulations which are very fundamental to any company, any entity to remain as a going concern. And therefore, what the code says, that as an auditor, if you come across non-compliance with these laws and regulations, you are required to bring it to the notice of those charged with governance. That is the audit committee, the independent directors, the board of directors. Bring it to their notice. Ask them to take corrective actions. And if for some reasons they refuse to take corrective actions, if you are not satisfied that they are not taking corrective actions, then you are required to report it to the concerned regulator. So a chartered accountant who is an auditor of listed company cannot keep his eyes closed. If the company is engaged in terrorist funding, if the company is engaged in violations relating to public health and safety, environmental protection, these are very, very fundamental laws. So if the auditor comes across any of these non-compliances, major non-compliances, it is not procedural non-compliances, but if there are very material and major non-compliances, then it is the duty of an auditor of a listed company to report it to the concerned regulators. Similarly, a person who is an employee of the listed company, he is required to bring it to the notice of his superior management. And if he is part of the superior management, top management, he should bring it to those charged with the governance. So there are responsibilities being cast on the chartered accountants as employees of listed companies that you cannot keep your eyes closed. And if you come across this no-CLAR, non-compliances, then you are required to take some steps. Now, friends, in the case of listed companies, there is a whistleblower policy already in place. The whistleblower policy will require that if there is any corruption practices, any unethical practices, then any employee of the company can bring it to the notice of a person who is designated by that whistleblower policy, and then it becomes the responsibility of that person to carry out an inquiry and see what wrong practices are happening. So there are already checks and balances. As you know, Section 143, subsection 12 of the Companies Act requires the auditor of a company, and that applies to auditor of listed or unlisted company, even a private limited company. If a fraud has taken place or if a fraud is taking place, the auditor is required to report it to the Ministry of Corporate Affairs, Government of India. There is a procedure which is prescribed. The procedure is, first you write to the audit committee. Audit committee has to respond to the auditor within a period of 45 days, and overall within a period of 60 days, the auditor is required to report it to the central government. So friends, these are all existing responsibilities. And now, in addition to that, the ethical principles have brought in this concept of non-compliance with laws and regulations, and therefore it also becomes an ethical duty to see that if there is a material non-compliance with the laws and regulations, the auditor should blow the whistle and bring it to the notice of the concerned people. Now, no-CLAR does not apply to matters which are inconsequential. Suppose I am required to file a notice, I am required to file a return, I am required to file one document under the health and safety laws or with respect to pollution control laws, and there is a procedural delay. So these are not the laws which are being discussed. But if there is something very important which comes to your notice, which can result in heavy penalties, or it could cause death of many people outside the company, as happened recently in Visakhapatnam, where there was a leakage from one of the company, and so many people died in that accident. Now, if such a thing is happening in an audit client of which is a listed company, and if there is a complete, so to say, no care is being taken in that area, then the auditor is required to blow the whistle and bring it to the notice of the management, those charged with governance. And if nobody is acting, then only to bring it to the notice of the concerned regulators. So this provision has been deferred, but friends, those amongst us who are auditors of listed companies or who are employees of the listed companies should look into this provision. And I'm sure today or tomorrow this would become applicable. Once the COVID effect comes down and we'll come back to normal situations, the institute may implement it from 1st of January or 1st of April. So it is only a matter of time. And therefore, now is the time that we should ensure what is it that gear up for those preparations. Friends, the next part is what is the independence standards. This is already applicable today, and this is bringing in, it is codifying the existing independence principles as part 4A and part 4B. Part 4A is independence for audit and review engagements, and part B is independence for assurance engagements other than audit and review. Now, the new code of ethics also gives what we say safeguard measures. So if there is a breach and that breach is of a significant breach, then how to evaluate whether it is significant or not, and what are the remedial measures which are required to be implemented to mitigate that breach are more elaborately discussed in this section. There is a new concept of key audit partners. Friends, under the auditing and assurance standards, we are aware of an engagement partner. We know what is an engagement quality control partner. and what is at a firm level a quality control review partner. These are terms already defined in our auditing and assurance standards. Now, the concept of key audit partner is important from the point of view of a firm which has, let us say, which is a medium to large size firm, which has, say, more than more than six partners who are there in that firm. So, therefore, if it is a proprietary concern or it is a firm with two or three partners, this is not really applicable. And therefore, the concept of key audit partners is more in context of those of audit firms where there are more than 5 or 6 people working together, are working as partners or managers together and rendering services. Now, what is this concept of key audit partner? See, our ethical principles are principle based. They are not rule based. Principle based means a principle which is generally applicable but which does not lay down specific rules. Because if they are in the form of specific rules, then you can find ways to beat those rules. But if they are broad principles, then one cannot really escape from the rigors of those broad principles. So, if I am a partner in a firm and assuming I am a managing partner, I have some major audit clients. Now, what I do is I make a junior partner as an engagement partner. He will go and sign the audit report. I have another partner who, again, a junior partner, and I'll say that other second junior partner will be the engagement review partner. But I am the main partner. And as a main partner, I am interacting with the client and I am uh, heavily involved in the audit, but on the paper, I am nowhere there in the picture because I am not the signing partner. I am not officially the review partner, but I am already involved in that audit and I am attending meetings. I'm talking to the client. I'm negotiating the fees. I'm looking out for other work with respect to that client. Now, friends, in such a situation, under the new definition, I would be also considered as a key audit partner. So with respect to that audit client, whatever restrictions apply to the engagement quality control partner, whatever restrictions apply to the engagement quality control partner will also apply to me because I am the key audit partner. And therefore, it is a principle that whosoever is involved in that audit has to be made accountable and responsible for any ethical failures in context of that audit. And again, this is a concept which will not affect small and medium practicing firms, but is important from the point of view of larger firms, medium to large sized firms, where say 10, 20, 30, or today even 50 chartered accountants are practicing together. There, these concepts will become very important to ensure independence, ethics, integrity, and confidence of the society. Now, another concept which is brought in here is rotation. Earlier in the 2009 Code of Ethics, we did not have this concept of firm rotation. Firm rotation has come in under the Companies Act 2013, which became effective from 1st of April 2014. The Companies Act section 139 of the Act says that in case of auditors of a listed company and any other company and such other companies as may be prescribed by the Ministry of Corporate Affairs, the principles of rotation of firms would apply. And in terms of the powers given under section 139, the government has notified every company which is a public limited company having capital paid up capital more than 10 crores and a private limited company having a paid up capital of more than 50 crores is required to ensure compliance with this concept of rotation of firms. So what is brought in law effective from 1st of April 2014 is now also brought in our ethical in our code of ethics, because the 2009 code of ethics speaks only about rotation of partners but not rotation of firms. So what is introduced in the code of ethics by way of rotation of firms is the same as what is already as part of the law, and nothing new is being brought in by way of rotation of firms. As far as rotation of partners is concerned, what has now been brought in is that the rotation of partners would also apply in addition to rotation of firms, and there is a cooling period which is given. The cooling period under section 139 is that if it is a case of a firm can be appointed for 2 terms of 5 years each. That is for a total period of 10 years. But after 5 years, the engagement partner has to be changed. Now, what is brought in the code of ethics with respect to change in the partner rotation is that after a period of 7 years, that audit partner should not be involved as in any other capacity. So once he has been an engagement partner, then he cannot be involved as a engagement quality control review partner or even as a key audit partner. Now, here I feel, and this is my personal view, that the rotation of partners is not really required in our code of ethics because we already have a more severe requirement of rotation of firms. And this is where possibly over a period of time, in my humble view, this may even undergo a further change. And rotation of partners today, the way it is envisaged, may require some more changes. But friends, as it applies today, in case of audits, we need to ensure that we are following with the principles of rotation of partners in case of audits wherever it is applicable. So if a person has been, where rotation of firms is not envisaged, but if a person has been a partner for 7 years, then it is desirable that that partner is rotated and some other partner becomes the engagement review partner. So in case of private limited companies, while this would be a good principle to follow, or in case of unlisted public limited companies, this could be a good principle to follow, that after 7 years, the partners should change. That will certainly bring in a better quality of audit because a new person will look at the same audit but from a different angle. Now, friends, coming to proprietary concerns, it does not mean that after 7 years, the proprietor should give away that audit. This is not the intention of Code of Ethics. What is the intention of Code of Ethics is that you need to demonstrate. If you are a proprietor, then you need to demonstrate how you are still independent of that entity of your audit client if you continue to be the auditor years together. So if I am a tax auditor of a listed company, and I'm giving a very specific example, when I'm appointed as a statutory auditor under the Companies Act, that firm cannot be appointed for more than 10 years. If it is a proprietor, that proprietary firm cannot be appointed for more than 5 years, if the appointment is in terms of section 139 of the Companies Act. But I'm being appointed under section 44AB as a tax auditor of a listed company. When I'm appointed as a tax auditor of a listed company, there is no rotation which is envisaged. And that firm can continue as an auditor, tax auditor of a listed company for any time period. In such cases, it would still be desirable to see that after a period of 7 years, that firm should rotate the partner. In case of a proprietary concern, the Code of Ethics does not envisage that you leave the audit. All it requires is you should undergo, let us say, a peer review. Demonstrate that you have been following the all auditing and accounting standards and the ethical principles in context of those audits. So that is how we should proactively and progressively look at Code of Ethics, look at how best it can be implemented, because this is what is required to give confidence to the society that we are independent of our audit client. And even if I continue to serve my audit client beyond a period of 10 years and I'm a proprietor, then also I'm ensuring compliances with all applicable technical, ethical standards while carrying out that audit function. Then friends, let us come to the next concept of management responsibilities. As I said earlier, we have a lot of principles in our existing Code of Ethics which restrict us from giving certain services to our audit client. So, for example, and at the cost of repetition, I may say that statutory auditor cannot keep the books of accounts. Statutory auditor cannot be the internal auditor of the audit client. Now, Section 144 of the Companies Act also brings in those restrictions in context of the companies. Now, what is the restriction with respect to non-corporate entities? That comes in the form of this code of ethics. So what the code of ethics says is that if I am an auditor to a company or to a partnership firm, to any audit client, in context of that audit client, I should not take up any management responsibilities of that client. Now, this does not mean that I cannot take up administrative work. I should not take up management responsibilities, but administrative work can still be done. And what could be examples of administrative type of work would be, say, filing of the income tax returns. In the sense that I am an auditor to a company, can I file the income tax return? Can I file the GST return? Can I help my private limited company client to file its ROC returns? Answer is yes. The code of ethics is not prohibiting us from that. But what code of ethics is saying is that because the responsibility is of the auditee, the auditor cannot take up that responsibility. The auditor can render services to that audit client, but should not be responsible for the outcome of that work, should not be taking decisions on behalf of the audit client. So as an auditor, I cannot decide whether this expenditure is allowable or not. That is a distinction which we need to make. The income tax return is being filed by the SSE. The income tax return is being verified by the SSE. My responsibility as an auditor is to see that when that return is filed, whatever is the computation of income, I have advised the client, the audit has taken place. Based on that, I'm just preparing an income tax return, which is being still signed by the SSE, and then it is being filed. So distinction needs to be kept with what is a management responsibility and what is a normal administrative work. So examples of management responsibilities which cannot be done is prohibition on recruitment services, enhanced general description of recruiting services, or carrying out certain IT audits in the guise of internal audits, or in the rendering some such assurance services other than the statutory audit to the same audit client. So non-assurance services concept has been more strengthened in the new code of ethics. And friends, it applies to all audits, audits of public interest entities, as well as audits of non-corporate entities also. But the routine services which we are rendering, which we can continue to do. But in context of a private limited company, there are 8 types of services which have been prohibited. As you know, under section 144, valuation services cannot be done, internal audit services cannot be done, bookkeeping services cannot be done, recruitment services cannot be done. And then they say management services cannot be done, though the concept of management services has not been defined in the Companies Act. And it again says that any other services as may be prescribed by the central government from time to time are the services which cannot be rendered to a company, to its holding company, to its subsidiary. So in the group as a whole, those services cannot be rendered. So these restrictions are already there in context of companies. Similar restrictions are now being brought in context of non-audit, non-corporate entities also. Now, friends, taxation services is one service which has been deferred for the time being, and this is not applicable as of today. But again, normal filing of the income tax returns, appearing on behalf of the behalf of the clients before the assessing officers, appearing before the commissioner appeals, income tax appellate tribunals, those matters are not being restricted. What is being prohibited under this clause is providing services such as aggressive tax planning, being part of a team of the audit client to decide what kind of restructuring should be carried out, what kind of uh, hiving of the companies can be done, mergers and demergers to be done, what kind of a slump sale to be carried out, so that in future the tax quantum can be reduced. Now, what happens when we render such kind of services on tax planning is that we become a part of a team which is deciding these matters. And when you become part of a team, then when you have to audit the tax provision, then there is a case of a self-review. As part of a team, as a consultant, I have advised my client as to what kind of tax planning would reduce the tax liability. And then the client makes a tax provision based on my advice. Later on, as a tax auditor, I say this tax provision is adequate. Now, that is where there is a conflict of interest. If I am an auditor, I must first discharge my duties as an auditor. And subsequently, if permitted, I can still be a consultant. So if once I have audited my client and I have issued an audit report, I have issued a tax audit report. Based on that tax audit report, if the income tax return is to be filed, there is no conflict of interest. To my mind, there is no conflict of interest. But again, after filing the return, if I am appearing before the assessing authorities, there also there is no conflict of interest. But I am part of future tax planning, which is going to decide the tax quantum. Then I, as an auditor, am reviewing the tax provision which was made on the basis of my own tax advice. So one person cannot be an advisor and an auditor for the same transaction. And keeping that in mind, such kind of taxation services are proposed to be prohibited. However, this has been deferred, but this is a good principle, and I would still advise that in case, even if it is not applicable, we should not be part of any excessive tax planning for an audit client. We should maintain the difference between an auditor and a client and a consultant appropriately. So render the regular services, but if there is a very serious tax planning required to be done, then we need to keep an arm's length. Yesterday in another webinar, I was discussing the auditing standards. And in context of auditing standards, friends, we should bear in mind how the conflict comes in. And when there is a conflict, the state of independence of mind is what is important. In case of a private limited company, a company can accept loans from its directors, but director is required to give a declaration to the company to say that the money being advanced by him to the company is out of his own sources. If that declaration is there, then as an auditor, I will say, yes, the company has accepted deposit from a director. Director has given a declaration, and therefore it is a deposit which is exempted from the provisions of company's acceptance of deposit rules. But friends, if that director is my income tax client, I am aware of his statement of affairs. I am aware of the fact that he has borrowed loans in his personal capacity. And out of those borrowed loans, he has given loans to the company. I am aware of that as a tax advisor to that director. Now, when I sit as an auditor of that company, would it be right for me to accept that declaration which he has given to the company saying that the money has been given out of his own sources, whereas it is in my personal knowledge that that money is not out of his personal sources, but it is out of his borrowed money. That is where there is a conflict. And the code of ethics and the law requires us to have an independent state of mind. When it is in my knowledge that that declaration is not correct, then I cannot accept that declaration when I sit as an auditor of that company. And that is where the ethical standards require us to be independent of the client And if it is creating a conflicting position, either you resign as an auditor or you resign as his tax advisor. But if you are continuing in both the positions, then we should give more importance to the audit than to the consultancy services. Because let us not forget that audit is prerogative of only the chartered accountants. Time and again, a situation arises, friends, when the tax consultants, tax practitioners also approach the Central Board of Direct Taxes and say that permit us to carry out the audit under Section 44AB of the Income Tax Act. And as an institute, our stand is the tax practitioners have knowledge on taxation laws. We respect their knowledge. We have nothing against the tax practitioners. They are all after all, our own professional brothers in a similar line of professional activity. We have we cannot doubt their tax knowledge. But what the institute says is the chartered accountant has the knowledge of audit, and the chartered accountant follows highest ethical principles as laid down in the Code of Ethics. Auditor is required to have an independent state of mind. And therefore, friends, if we want our monopoly on audit to continue, if we want that our institute should continue to bring to the regulators and government why only chartered accountants are competent to do audits, then it is essential that we should proactively follow the best ethical principles, even if they have not been implemented as of today. This is deferred, but this is already in the public knowledge, and I would urge that we should follow it in spirit, even if it is not made applicable. Then, friends, let me come to this matter on fees. Fees is one subject matter which has been of great public debate. I have seen in various social medias also that fears have been expressed by many small and medium practicing firms that this would affect the new chartered accountants, the young chartered accountants, or even smaller firms to a very great extent. I look at this new provision in a completely different way. I think this is one provision which is going to strengthen my hands. Let us look at what is the existing provision and what it is proposed to be replaced with. The existing provision is the restriction on more than 40% of the fees from a single client. The self-regulatory measures say that we should not have more than 40% of fees from a single client. So if my fees is say 50 lakhs of rupees, I have two clients. One client is giving me 25 lakhs, the other, or say both the clients are giving me 25 lakhs. Or one client is giving me 20 lakhs, the other client is giving me 30 lakhs. And I have few other clients which are giving me say 10,000, 15,000, and my aggregate fees is say 50 to 55 lakhs. There, the existing self-regulatory measure says that fees from one client should not exceed 40% of my total fees. Now, as against that, the new Code of Ethics is saying that if your fees is more than 15%, so that 40% threshold is being reduced to 15%. But what it says is, if it is reduced to 15%, and if such is a position for 2 years, for 2 consecutive years, your fees from one client is exceeding 15%, then you have to demonstrate to those charged with governance that you are independent of that client. The existing self-regulatory measure is you have to leave that client. The new measure is you have to demonstrate your independence. So you can continue with that client. So I have one client and I have assuming a single client, and that client is giving me 50 lakhs of rupees audit fees. I have no other client. So the new Code of Ethics will say, I need to go to those charged with governance in that company and demonstrate to them that, sir, although you are my single client and I'm based on you for my entire fees, I have ensured complete independence from the management. I am ensuring compliance with all technical standards, compliance with all the applicable auditing standards. I have ensured compliance with all accounting standards, and my ethical principles. I am still independent because I have come to you. You can see my working papers, and I can demonstrate to you that I am independent of the management of this company. So, in a way, it is strengthening a professional firm. I'm looking at it as a good measure which strengthens my hands as a small chartered accountant, because now I can go and tell the society that yes, I am independent. I have demonstrated my independence to those charged with governance. Some changes would certainly be required in this case is that not in case of all audit clients, there is this concept of those charged with governance. In case of private limited companies, we do not have independent directors. So possibly what could happen is I may be required to go and tell the same managing director that, sir, you are my only client, and because I'm getting all your fees from you, I'm still independent of you. So where the independent directors or those charged with governance, that concept is not there, it will create a dilemma in going back to the management, telling the management, you are my only client, my fees from you is more than 15%, but I'm still independent of you. There the apprehension is that in some cases, our members will be put to disadvantageous situation. And therefore, wisely, I would say the council has deferred this provision. But this is again a concept which is in the larger interest of our profession. And today or tomorrow, this will come back, and we should therefore ensure that we gear up our practice in such a way that we can meet these challenges. Then, friends, one aspect which I would like to draw your attention to is this concept of contingent fees. Very interesting aspect. As you know, a chartered accountant cannot charge fees on a result-oriented basis. This is the general practice. A chartered accountant cannot charge fees on a contingent basis. That is subject to the outcome of the services. But friends, our regulation 192, very important for us to read. Regulation 192 says that a chartered accountant under certain circumstances can charge fees on a contingent basis. Based on certain principles, under certain circumstances relating to non-assurance services, we can charge fees on an outcome basis. I would request members to please go through Regulation 192, where certain services have been prescribed, where we can charge fees on a contingent basis. So again, it is important to know that fees on a threshold basis, it does not become a contingency. So supposing I say, if my audit client has a turnover up to 10 crores of rupees, I will charge him say 10,000 rupees. But if the turnover is from 10 to 50 crores of rupees, I will charge him 25,000 rupees. Now this is deciding my fees based on certain expected work which is involved. This does not mean I'm charging fees on a percentage basis. And if I decide fees on this basis, it is not unethical. I'm telling my client that if your turnover is up to 10 crores of rupees, I know I can understand how much of work would be involved, how many man-days would be involved. Accordingly, I'll charge you 10,000 rupees. But it does not mean I'm charging on a percentage basis. So up to 10 crores of rupees, my fees is, even if his turnover is 5 crores, 6 crores, 4 crores, I'm charging him 10,000 rupees. I'm just giving an illustration. Once his turnover has crossed 10 crores, I'm saying now it requires more time and work from my end, and therefore I'm going to charge you more. So friends, this is not a contingency. If you charge fees on this basis, it is not a contingency. Now suppose I am appearing and say I'm engaged in appellate practice. I'm handling CIT appeal cases. And I tell my client, okay, in your case, the addition is 1 crore of rupees. My fees is 1 lakh of rupees. Is it a contingency? Is it a percentage basis? Very interesting to know. If I'm charging fees based on what is the addition already done, it is not a percentage basis. It is not on a contingency basis. But if I charge my fees in such a way that in the appeal, depending on the relief that you get, if you get a relief of 50 lakhs, my fees is 5 lakhs. That is a contingency. That is what is not permitted. But if I tell my client, because the additions are made, say 2 crores of rupees, I'm going to charge you 1,50,000 rupees. This is not a contingency. Contingency will be if I tell the client that out of 2 crores, you get a relief of 1 crore, I'll charge 1 lakh of rupees. That is based on outcome. So when fees cannot be charged on an outcome basis, but fees can be charged based on certain criteria where you use that criteria to decide what is the quantum of work involved. Take the case of bank audits. What is the Reserve Bank of India saying? If the advances in that bank branch are up to this level, your fees will be so much. So, in a way, what the bank has done, what the Reserve Bank has done, has kept the advances as a criteria to decide the quantum of work involved, to decide the quantum of mandates which are required, and on that basis decided a remuneration. So that is a different proposition than charging fees on a percentage basis or on a contingency basis. But friends, as I mentioned, under Regulation 192, certain services can be rendered on a outcome basis also, on a contingency basis, on a result-oriented basis. So these are non-assurance services. These are consultancy services. So in a consultancy services, if based on certain outcome, and please go through that Regulation 192 very carefully. There are certain terms and conditions which are attached to that, and therefore you must, before you really charge fees on a contingency basis, you must for yourself read Regulation 192 and satisfy yourself that you are within the four corners of what is permitted in the regulation. Then, friends, one can charge fees on a contingency basis also for the services which are mentioned in Regulation 192, because our schedule to the Chartered Accountants Act, it says that fees based on percentage or contingency basis upon the findings or work done. Fees based on percentage of profits or contingent upon the findings or result of such work are not allowed as per clause 10 of part 1 of first schedule to the CA Act, except as permitted under Regulation 192. So the schedule itself says, except such cases as may be covered by the regulation. This powers, Regulation 192, where it can be charged in a manner different from what is envisaged in Regulation 192, is envisaged under clause 10 of part 1 of first schedule. So I'm not taking all the aspects of the new code of ethics. I thought let me touch base on those areas which are more important from the point of view of majority of the members. With that, friends, I will come to the end of my presentation with respect to the first part, which is code of ethics relating to volume 1, and I would start my second presentation on volume 2. And I hope again, Mr. Srinivas Gupta and my other friends there, that my presentation, second presentation is now visible and it can be seen on the screen.
Sir, it is visible, sir.
Okay, sir. Thank you, sir. Now I move to volume 2. Volume 2 is our existing Chartered Accountants Act and the various clauses under the CA Act and regulations where certain amendments have been made, and it would be important to see important changes which are there. It is 12:30 as of now. I will take you through the important changes in next 10 to 15 minutes, and then remaining 10-15 minutes we will devote for question answers. So there is advertisement guidelines which the council has issued. Solicitation is not permitted. Communications under clause 8 are mandatory. Let me give the background for this advertisement guidelines. Friends, very important amendments took in our Chartered Accountants Act in 2006. Prior to 2006, the Chartered Accountants Act did not permit a professional chartered accountant to advertise. But what happened was that somewhere in 2000, we had the Competition Act which was brought in our country. And Competition Act is meant for healthy competition amongst all players in the trade and commerce. So prior to Competition Act, as you know, we had MRTP Act, Monopolies Restriction and Trade Practices Act, MRTP Act. MRTP Act was replaced by Competition Act. Same way as Foreign Exchange Regulation Act, FERA, was replaced by Foreign Exchange Regulation Management. FERA was a criminal law, FEMA is a civil law. Similarly, MRTP Act had a lot of restrictions, but under the new regime which we have in our country from 1992, they said MRTP is not good, we should have Competition Act. So Competition Act is meant to promote healthy competition. Now, services is a very important area in the total GDP of our country. And chartered accountant services are also equally important. Now, what was happening is we had clause 10 of our clause 10 of part 1 of first schedule to the Chartered Accountants Act, which said that undercutting is a professional misconduct. So if Mr. Chengal Reddy has a client and Mr. Chengal Reddy is charging say 25,000 rupees to that client, I cannot go and take that client for a sum less than 25,000 because that will be professional misconduct. Then the debate in the society was that if both the chartered accountants are to follow the same technical standards, same accounting standards, same auditing standards, then why cannot the service recipient, that is the audit client, look out for another auditor who is willing to charge fees less than the existing auditor? And why should law prohibit that? Please understand the basic reasons for these changes. We have a Competition Act which promotes healthy competition. So why the company, the auditee, should continue with the same auditor and cannot look out for another auditor who is willing to charge lesser fees and who is also required to comply with the same technical standards? Why should the law prohibit it? So 2006, the Chartered Accountants Act has been amended and professional misconduct is no longer undercutting of fees is no longer a professional misconduct. Very important change which took place in 2006. Then friends, when this change was taking place, naturally the requirement of the profession was, see, the professional also has certain business economics in which the profession works. How do you expect a new professional to build his professional practice? How can you say there is a level playing field? So the lawmakers said, solicitation is still a professional misconduct, but you may advertise. Now, you are chartered accountants, an elite body of intellectuals, you are knowledgeable. So the parliament said, you may advertise. To what extent you should advertise, we leave it to your council of the institute to frame the guidelines. So this is how the very important structural changes took place in 2006. That undercutting is no longer a professional misconduct. So if I am charging X amount of rupees to my audit client, another chartered accountant can come and charge less than X to that audit client. The regulator, the Institute of Chartered Accountants of India as a regulator, will have no objections to any person charging lesser than the existing auditor. The institutes as a regulator's concern is what is the technical level at which you have technical competence which you have used to charge that fees. What is whether you have ensured compliance with all technical standards or not. Ultimately, then the fees is a matter of commercial judgment. Somebody may say, I'm going to work 12 hours a day, 6 days a week, and my cost is less. Somebody will say, no, I'll work only for 4 days in a week or 5 days in a week, 10 to 5. My fees will be 50,000 rupees. Other person is saying, I'm a newcomer. I want to establish my practice. I'm willing to work 7 days a week. My fees will be 10,000 rupees. So can you say no to that young newcomer who is willing to charge lower fees, provided he is complying with all technical standards? So clause 10 was amended. Undercutting is no longer a professional misconduct. Advertisement is permitted, subject to the guidelines framed by the institute. That is the background in which we should understand these changes. Now, if you ask me, friends, or if you ask our worthy past president, Mr. Devraj Reddy, we belong to that era where we would still say, please don't advertise. A person is known by his professional knowledge, not by his advertisement. No client comes to you, friend, because you put up a big board or you advertise your services. That is my view. But if some of us who wish to advertise, and since the law permits it, I would suggest you may you may undertake advertisement, but please ensure that you are within the strict framework of the guidelines issued by the institute. If you are within that framework, there is no difficulty. You want to advertise your services, you can advertise that. My personal view is we should not advertise, but I cannot impose my view on the members, more so when the law is more liberal on these matters. So solicitation is not permitted, but advertisement is permitted to the extent prescribed by the council. So it is here that we should appreciate what kind of recognition our profession has. Many a times we have so many people who knowingly, unknowingly keep criticizing the council and criticizing the elected leaders. But we should appreciate the kind of hard work which our elected people like Mr. Chengal Reddy and our friend Naresh Geli are rendering to the cause of the profession and to all the elected members of the managing committee of all the branches. They are the people who are working day in, day out without any remuneration for the benefit of the students and members, and without getting any personal rewards. No personal rewards. It is only a compromise, sacrifice on the part of elected leaders. And the society, the lawmakers recognize and appreciate the quality of the work which the council of the institute is doing. And therefore, in an act, it is said that Advertisement will be based on the guidelines to be framed by the council of the institute. So that is how these professional misconduct matters relating to how we carry out our professional duties are required to be seen. First schedule is with respect to members versus members. Second schedule is members versus society. Now, we have this clause 8 of part 1 of the first schedule, communication with the previous auditor. What is this communication for? Technically, it is communication and it is not seeking a no objection from the previous auditor. Suppose my client, I am an auditor to a client and some new chartered accountant is appointed by that client as the auditor. The incoming auditor writes to me, do you have any objections to my appointment? Can I say, yes, I object to your appointment? And will that objection be valid to the incoming auditor and can it stop him from accepting the audit? Answer is no. Clause 8 does not talk about taking a no objection. It only requires that we should communicate with the previous auditor and communicate effectively with the previous auditor to find out if there are any reasons in his knowledge as to why I should or should not accept that appointment, and keep that in my mind when I carry out the audit. And it is a professional decorum that my predecessor should be informed by me that, sir, now in your place, or madam, in your place, I have been appointed as an auditor. So that is a professional gesture. It is not seeking no objections. And what is envisaged under clause 8 is to have an effective communication. So friends, say 30th September is the last date for tax audit. And client comes to you on 25th of September and says, please accept my audit. My previous auditor is not cooperating with me. He's taking too much of time. He's very fussy. His fees is more, etc., etc. Now, what our code of ethics require is we should communicate with the previous auditor, communicate preferably by registered post or speed post. Today, you are permitted to communicate even by email, provided the other person acknowledges the receipt of your email. Otherwise, simply you write a mail to the other person, to the outgoing auditor, and he does not acknowledge your email, then that is an ineffective communication. He has to acknowledge that he has received your mail. And the institute expects that you should give an outgoing auditor a reasonable time to respond to your communication. So now what is reasonable time? If I am being appointed as an auditor, or say, for instance, you are auditing a client in my hometown in Indore, and I send a communication to you. You are sitting in Kurnool, I am in Indore. I have sent a letter by registered post, even it takes say 2 days to reach you. I have to wait for a reasonable time. A reasonable time in such a case could be 10 to 14 days. If you and I are in Kurnool, we can say reasonable time is 1 day, 2 days, because within the same city. But we are sitting in 2 different states. The reasonable time could be 10 to 14 days. Now, if the auditor, incoming auditor, is to say, it is 30th of September. If the audit is not done by that date, there is a penalty prescribed. How can I wait beyond 30th September? Friends, it is a requirement under the law. Nothing prevents your client from appointing you well in time. It is the sweet choice of the client to appoint you as an auditor in end September. That does not give you the liberty to make an ineffective communication. Give a 1 day notice and next day start the audit and finish the audit. There are umpteen such number of cases which have come to the council where members have been held guilty of professional misconduct. Our senior members will tell us, will agree with me, that in majority of the cases, for delay in filing the tax audit reports, no penalty is imposed. In fact, I wished our Devaraja Reddy would have been present at this point of time. He tells me he has filed so many tax audit reports after the due date and no penalty has been imposed in any of such cases. Because there is a reasonable cause is required to be demonstrated. If you demonstrate a reasonable cause, the penalty is not imposed. But as an incoming auditor, if I do not give a reasonable time for communication, then be sure the institute is going to take action against such a incoming auditor. So we have to be very careful. These are simple matters of communication with the previous auditors, and we should follow that in letter and spirit. Then we have okay. We have section 7 of the Chartered Accountants Act. Friends, our Chartered Accountants Act is a very small act, hardly some 25 or 30 sections, not running more than 30-40 pages. We read voluminous Companies Act, voluminous Income Tax Act, GST law, but many a times we forget to read our Chartered Accountants Act. Section 7 of the Chartered Accountants Act says, a chartered accountant in practice will be known as a chartered accountant. So people come and ask questions. I have completed diploma in information systems audit. Can I write myself as information systems auditor? I have done a XYZ course. Can I refer to that as that kind of with that qualification? Answer is no. What is required is, because section 7 of the Chartered Accountant Act prohibits a person in practice to be designated by name other than a chartered accountant. But today, if I have done, say, insolvency profession course, which is also recognized under the law, in addition to a chartered accountant, in such cases, a person can be designated also as an insolvency professional. But I cannot designate myself as auditors and consultants, tax advisors, experts in taxation subjects, or information systems auditors, forensic auditors. These are not qualifications recognized under the law, and therefore we cannot use those designations in addition to or in substitution of the word chartered accountant, because section 7 of the act prohibits us. Then on visiting cards. On visiting cards, it is permitted to be referred to as insolvency professionals registered valuers. But we cannot use positions as I've been the ex-director, ex-president of the Institute of Chartered. Okay, president of Institute of Chartered Accountants could be permitted as per the new guidelines. So one who has been a council member can say is an ex-council member. The last highest designation which a person had in the institute can be used. That has been permitted. But can I say I am a past district governor of, say, Rotary or Lions or any such organization? Answer is no. Can I say on my visiting card, I'm an ex-director of so-and-so bank? Answer is no. That is not what is permitted. Of educational qualifications can I write? Any educational qualification which is permitted under the law. I cannot use, so just to give an example, DISA is a professional qualification recognized in the regulations. But forensic audit is a certification course which is carried out by the institute. Ind AS certification course is a certification course carried out by the institute. It is not a professional qualification. So you can write DISA, but you cannot say you are a forensic auditor. That is the difference between a post-qualification course and a certification course, which should be borne in mind. Then tenders is something very important. Our regional council members would be in a better position to answer these questions than me. But tenders, friends, is a reality. If the tender is for a statutory audit, then the institute expects that there should be minimum fees which should be prescribed in the tender for a chartered accountant to apply to that tender. Otherwise, if it is open to other professionals, it is for non-statutory audit services, then it is permissible for a person to participate in that tender. But tenders have resulted in very, very low fees. And I would only urge and request our members to ensure that we charge reasonable fees, which is commensurating with the work which is involved. Otherwise, it is better not to accept that professional work. Ultimately, we must bear in mind that the image of the profession is the sum total image of the work done by all of us. And if all of us do a good qualitative work, the image of the profession will be very high. Otherwise, the institute may keep doing good work, the council and regional councils and branches may keep doing good work. But if individually we are not rendering our services properly, the image of the institute and the image of the profession will not be high. So ultimately, it is up to us as individuals, as professionals, to uphold the image, to uphold the ethical standards, and to be independent, which is a state of mind, and which is not a tick box or a check box type of item that, yes, I have done these 5 things, so I am an independent. So friends, my presentation I'll share with our at this point of time. If there are any questions, I'll be happy to answer them. Thank you very much to all the 3 chairmen of Kurnool, Anantapur and Kadapa branch. My thanks to both the regional council members for giving this opportunity. And I wish all of us remain safe, follow all the social distancing and wearing masks in public, all those norms. Let us stay safe, stay healthy, work for our country, work for our profession. Jai Hind, Jai ICI. Thank you.
Thank you, sir. Thank you, sir. As there are just 3 questions.
Yes, sir.
Queries which have been mentioned. Sir, should I read?
I would request our CA Naresh Geli and CA Chengal Reddy, if they wish to contribute on any of these subjects. They have both very vast knowledge on the subject. Okay. I would be happy if you could add up to certain things, or if I have missed out any important things, if you could highlight that. Thank you.
Okay, sir.
Srinivas Gupta Garu, I'll just share a couple of points.
Okay.
Sir, actually, the practice people follow is, as you rightly mentioned, clients come in the last minute, and documentation is definitely not to the extent that is expected. So probably if you can share some ideas or share some experiences without giving the case details. Maybe your experiences is in the DC cases where people have, in terms of tax audits, documentation is poor, and what is the consequences of that? Because most of the members in this part of the region, there are a lot of proprietary firms, partnership firms, and majority of activity will be in terms of tax audits. Is it correct, Srinivas Gupta Garu? Anything to add?
Sir. Yes, sir. The same thing.
Yeah.
Thank you, Geli, CA Naresh and Geli Garu. You have raised a very pertinent issue. Friends, it is true that the audit client will come at the last moment. It is because he is a proprietor, partner of a business. He is facing so much of business challenges. In addition to that, he has to make regulatory compliances. We have to understand the mindset and the psychological issues of the client also. But at the same time, whatever our requirements, we have to adhere to those requirements. What is important for us is to see that we ensure compliance with all auditing standards. And to ensure compliance with the auditing standards, we should have standardized formats available with us. Now, let me give you one example. SA 501 says that it talks about specifically it talks about, say, inventory verification. And SA 501 is mentioning about, it says that verification of inventory, if inventory is material, is an important audit function to do the physical verification of inventory. Now, my client appoints me in the month of July, August. How I can verify the inventory as of 31st of March? So SA 501 says, okay, you verify it today in August and then make adjustments for sales and purchases and arrive at the inventory of 31st of March. And if you are unable to do that, then we are required to give a qualification in our audit report. Now, friends, in case of most of the non-corporate entities, which are traders, there are large number of quantities, large number of items in which they are dealing. Take a grocery shop. He has more than 1,000 types of items in his shop. And in his mind, in his knowledge, he knows the stock of every item. That is how he has been running the business. Now, for him to physically verify the inventory is impossible. My standard says you should physically verify the inventory. Now, what I should do in a practical sense, if we can verify the inventory, please verify the inventory. But if we cannot verify the inventory, in Form 3CB, where it says what are your comments, observations, qualifications, there please mention that we have not been able to physically verify the inventory. There is going to be no problem to your audit client, because your audit client is, he's showing a particular GP margin, say 15% GP margin. His assessments are being carried out on that GP margin year to year. And if he has shown 15% GP margin as was shown in the last year, his assessing officer is going to accept it. So I have discharged my duty to my standards by giving a qualification. At the same time, no difficulty is there for my auditee also. Otherwise, what happens, friends, is I have not verified the inventory. I have not mentioned in my audit report that inventory has been verified. I have filed my audit report, and these are exact cases as our regional member, Mr. C.A. Gailey mentioned. I have seen a case where the audit is done in the month of October, when 31st October used to be the due date. In the month of November, there is a survey which is carried out in the premises of the SSC. And in those days, up to very recently, the very common thing in a survey would be that you... Now, the income tax team, what they do is they will take the physical inventory as of that date, make adjustments of sales and purchases the same way as SA 501 tells us to do. And they will say that last year also your inventory was so much and you're showing so less inventory in your books. And therefore the SEC says, to avoid litigation, to buy peace, I'm going to surrender the inventory. Now what happens, friends? What happens to the tax auditor? The standard said that he should have physically verified the inventory. Our institute says that tax practitioners will not do the audit. Our auditors do the comply with all auditing standards. Only chartered accountants will carry out the audit. Now the department will say, you are the only person who is supposed to do the audit. Your standard says you should have physically verified the inventory. You have not verified the inventory. And we have found so much of differences. So the way out is, please see our auditing standards. They are our best defense. We can give a qualification in the audit report saying that data have not been confirmed. We know in most of the cases, the party balances are not confirmed. Now, the standards on external confirmation says you obtain confirmation from all the parties. Now, if that has not been obtained, all that is required is in that Form 3CB in para 4, let me put down 4 or 5 major qualifications. Vouchers are not available for petty expenses. Inventory has not been verified. Debtors and creditors are subject to reconciliation. That protects us as auditors. And none of these have any, in general, have any adverse impact on your audit client. So, by practically using the standards on audit, make proper disclosures in the audit reports to safeguard yourself. And by safeguarding us as auditors, we will not create problems for the client. See, somewhere there will be pressures. I have seen cases where people come and say that there is a group, the group has say 10 entities, and there are 2 auditors or 3 auditors in that group. One auditor is following all the auditing standards. He makes all disclosures. And invariably, those cases are picked up for scrutiny assessment. And the managing partner comes and tells this auditor who is so regular in reporting that because of you, my cases are being picked up for scrutiny assessment. The other auditor is such a decent auditor, he doesn't make any observations. Those cases are being accepted in summary assessment. Now, all these practical problems have no solutions. It is for us to do the audits, and each one has to live up to the auditing standards. It will not do if I say, oh, why should I follow? Let Mr. Gali follow the auditing standards. Let Mr. Chengal Reddy follow the auditing standards. Let me just slip out. No, each one has to follow it. And if the other person is not following the auditing standards, does not mean that I can also be excused from not following the auditing standards. That is how we should take it.
Well, that's really wonderfully explained, sir. I'm sure members would appreciate the importance of documentation that is required. Friends, actually, as sir has rightly mentioned, what sir has mentioned is all those practical points which are possible and which should be done. It will only save us tomorrow if there is an issue, maybe department, if they file a case on the member and that goes up to the DC case and it creates trouble for us in a long way. I would request any other member if you have any specific question. I think Q&A, there are some 8 questions which have come, sir.
Yes, sir. Yes, sir.
Okay, I can see these questions. I'll take up this. First is private limited company accepted loans from earlier non-directors, non-shareholders, and I accepted audit this year. What can I advise to do the correction? Now, first is having accepted the audit, you are an auditor. You are not an advisor. Let us be clear. Let us not play the dual role. If there is a dilemma, leave the role of auditor, be a consultant. This is the first principle. Now, based on what is the factual position, please report. If the company has contravened the provisions of section 73, please report. And then take up the role as an advisor and take the company out of that problem. There will be some compounding fees, there will be some penalties. It is not that the auditors, the directors will be hanged because they have accepted loans in contravention of section 73. So there is a provisions in the Companies Act. Help the company to rectify the situation. If the loans are from people who are not shareholders, not directors, then this year make sure that the loans are borrowed only from the shareholders and directors. Make sure that they give the declaration that the loans are borrowed, have been given from their personal funds. If you are aware that they are not from their personal funds, do not accept such declarations. Be a strict auditor. And it pays in the long run. You will never be required to do any advertisements. If you are a strict auditor, people will come to you because they will say, oh, if so-and-so person has audited, then I am sure I will not be visited with any regulatory problems. He would have ensured compliance with everything. That is the kind of reputation which we should try and make. Okay, whether a member can advertise in just dial directory, fine. Now friends, giving your names in directories is possible, is permissible, but it should not be different from the names of other persons. So suppose everyone's name is coming in font size 12 and I give my name in font size 20, then I am advertising. But if my name is also in font size 12, then it is okay. It is permitted. Okay, I'll read out the questions also. As attendees cannot see questions, but I am reading from the chat box, and these are to all. Okay, some of the questions are to panelists. Yeah. Okay. Q&A. Okay. So, if any non-member misuses the name of ICI, what are the responsibilities of members? So this used to be a big problem we do not know who is using our membership number and signing as a tax auditor. UDIN is one of the best, one of the very progressive reforms which our institute has brought in. My compliments to our council for this wonderful reform which has come in. Now, nobody can use your membership number and file a bogus audit report, because the moment your number is there, you will get an alert on your mobile and emails, and then only that UDIN can be generated. If UDIN is not there, then it is not your responsibility. In the past, there used to be so many cases. And now if you come across a situation that, say 2 years back, somebody has falsely issued a tax audit report in your name, then what should be done? So in such cases, the moment you become aware that a person, maybe your client or who is not a client, has used a forged, your signatures has been forged and an audit report in your name has been issued, please send a legal notice to that audit client. Even if he is your client, he is not your client. If he is your client and he is forging your signatures, I would suggest you resign from that audit. Don't have any trust and confidence in a person who can forge your signatures. Forgery is a crime. It's a criminal activity. So give a notice to the client, bring it to the notice of the concerned banks, regulatory authorities. If it is a company, write to the registrar of companies. If it write to the concerned income tax officer that this tax audit report issued in my name has not been issued by me. Take these proactive steps. You cannot just simply sit and say, what can I do? You have to take the first steps because a crime has been committed against you. So we should defend ourselves and give a legal notice to them. And once you have brought it to their notice, to a large extent, you can be protected from any consequences of that forgery.
Sir, can I read the question?
Yes, please. Yes, please.
CA Pradeep Kumar writes, scope of chartered accountant increasingly to IBC, CISA, multidisciplinary, I think, CISA, multidisciplinary LLP, International Association to regarding the advertising. Each institute has its own guidelines, some permit, some restrictions, etc. Now LLP companies which are not in practice are advertising without rendering variety of chartered accountant services.
So, Mr. Pradeep Kumar, if it is, if you are a registered valuer or you are an IBC professional, and you think that this profession is being carried out by some person who is not a chartered accountant, and he is advertising and you cannot advertise,
correct,
then it is for you to decide how to do your practice. If you want to retain the certificate of practice as a practicing chartered accountant and also do audit and attest functions, in that case, you cannot advertise beyond what is permitted in the advertisement guidelines of the institute. If you think that is becoming an hindrance to the development of your practice as an insolvency professional, and then it is for you to structure your practice accordingly. Please leave the certificate of practice as an institute. Don't do any attest function. You can carry on your practice as in a LLP form in a different under different regulations as may be permitted differently. The dilemma and difficulty arises because we want to do both the things. I want to do my tax audits, my company audits, my bank branch audits, and also I want to do insolvency professional work. And I want to get the best of both the things. Friends, that is where the problem is. And therefore, whatever are the advertisement guidelines, strictly comply with those guidelines. Even if you are practicing as an insolvency professional or as a registered valuer, do not go beyond the Lakshman Rekha of the advertisement guidelines issued by our institute.
Sir, the next member is an anonymous attendee. He says, are we allowed to mention registered independent director in our visiting card?
I don't think that would be permitted. On a chartered accountant's visiting card holding certificate of practice, if it is a qualification which is prescribed under the law, that can be used. generally saying I'm an independent director of so-and-so company on my visiting card would not be possible.
CA Ramachandru Harish, he says, now Gmail and some extensions can display whether the receiver has received and read the communication from the new auditor, but still he may not reply the mail. Can the tool showing that the previous auditor has read the mail can support the new auditor?
Yes, certainly. If you retain that tool that he has read the mail and he has received the mail is an evidence with you recognized under the Information Technology Act, which is a valid legal evidence in your defense. But you have to still give that that outgoing auditor sufficient time to respond to your mail. The fact that you have evidence will only prevent him from saying that he has not received the mail. But after he has received and read the mail, you have to still give him a sufficient time to respond to your mail.
So the next question is from CA Rajendra Prasad Gadi. What are the rules and regulations differentiating member from holding part-time COP with a full-time holding COP?
Well, I'm sure our CA Geli Garu can explain that better than me. Once you are holding a part-time COP, you cannot carry out attest functions, you cannot carry out, you cannot have article trainees under you. These are important limitations. Anything more?
No, that is enough. Now, basically, they cannot do any audit. Certification is what they can do.
Yes.
The maximum is certification, but other than certification, they cannot do anything. And then that is the ultimate limitation of being a full-time and part-time. Next person is anonymous member. He says, can we become consultant? Can we become consultant for promoting agency and also auditor for the company when company is independent, which the agency promoted? I think question is not very clear, sir.
And not permitted. So, I mean, generally the answer would be no, you cannot be a consultant for promoting an agency and be an auditor. Your independence will be compromised.
CA Elia says, good morning, sir. Whether multidisciplinary firm practice is allowed by ICAI to enter into partnership with company secretary, cost accountants in practice?
So, multidisciplinary is legally permitted, but practically it is not activated as of now because certain administrative guidelines between the three institutes are in the process of being formalized.
Next question, sir. CA Harish, he says, nowadays, many websites are calling and offering leads on prepaid basis for certain number of leads. How far it is permissible under the new code of ethics? We are clueless how they got our mobile number and the same type, similar type of websites.
So friends, we are living in a virtual world and your mobile number and your email IDs are available and known to all these agencies. So let us not be worried about that. If there is any, say, tender which has been issued and it is brought to your notice and you buy that information for a reasonable price. So that is not a professional misconduct. So you can, if there is a lead that, say, the government of Andhra Pradesh has issued a tender or some municipal corporation has issued a tender and you are buying this information from some other source. That is not advertisement or solicitation. So that is permitted. And make sure that the fees which is being paid is reasonable.
So the next question is from CA Meda Nagraj. He is a committee member in Anantapur branch. His question is whether a display of the billboard in the office premises with the services and fees for them amounts to solicitation or advertisement.
So if you have displayed a billboard in your own office premises internally, then that would not be a professional misconduct. That would not be an advertisement.
Next question again from an anonymous member. Are we allowed to advertise via Google Ads? I noticed few of our members were doing that.
Friends, be very careful. The advertisement guideline is very, very narrow in its scope. If you, and in matters of code of ethics, my very straightforward view is if you are in doubt, don't do it. because unless you're sure that it is permitted, everything else is prohibited. Now, for Google advertisements, I cannot visualize how it is being structured and if all the requirements of the institute's guidelines are being permitted. I will not be able to answer your question in affirmative, and I would just advise you to see that those guidelines, those advertisements, if you are advertising, are in compliance with the advertisement guidelines. Secondly is those who have done it, maybe knowingly or unknowingly, if they have done it after having understood the advertisement guidelines and then they have they have used those platforms, is a different proposition. But many do it unknowingly. So it is better to bring to their notice, if they are your friends or professional colleagues, it is better to bring to their notice that these are the advertisement guidelines and possibly you may be doing something which may not fall within your guidelines.
So this question is very important. A lot of members we get to know, but people ignore this situation. Number of CS working in companies and having certificate of practice, they apply for bank audit and do 44AB tax audits also. What is the solution for full practice, fully practiced members?
So this is not a new problem. This problem has been there eternally. And if there is somebody who is on the employment of a company, then certainly he cannot hold a full-time COP. But if he has, if it is not a contract of employment and it is a contract of a consultancy, he is working as a consultant, then he is in full-time certificate of practice. But if you are aware of people who are not holding a full-time certificate of practice, still carrying out such activities, it is better to bring it to the notice of the concerned branch. Branch should take it up with the regional council, central council member, and then the institute can, if there are large number of people, then that is how you can attack these problems. But it is better to do it through the local branches with the help of your regional council member or central council member.
Next question is from CA Imran Khan. He says, can an auditor accept statutory audit engagement of a private limited company if the registered office of the company is in the premises of the auditor? Rent is at arm's length price and security deposit is taken by the auditor.
So, Mr. Imran Khan, you are a landlord and also an auditor of that company, okay? And in a way, yes, if the transactions are at arm's length, it is permitted under section 143. Under section 141, it says that your transactions with the auditee should be at arm's length. If you have accepted a security deposit from a tenant who wants to appoint you as an auditor, you can accept the audit. Make sure that your security deposit and terms and conditions are at arm's length as provided under section 141.
Another question, sir, which is probably very rampantly used by people. What action taken by ICAI if some of the ITPs use CA logo on their boards and visiting cards and post social networks?
One who is not a chartered accountant and is posing himself to be a chartered accountant is a crime under the Chartered Accountants Act. It is punishable offense under Chartered Accountants Act. However, the punishment is not a big deterrent. Earlier it was 1,000 rupees, now it is increased to maybe a lakh of rupees or so. So these are difficulties which are there. It is again better to bring it to the notice of the branch, and the branch in consultation with the institute, the council, regional council, should take action against such cases.
Again, same anonymous attendee, he says, can a CA associate with tax law practitioners who is advocate and practices IT, GST, company law and set up office together? Again.
So, association is a loose terminology. A non-chartered accountant cannot be a partner, but you can have an arrangement with a tax advocate such that you are doing the audits and he is doing the taxation work. So that is an informal arrangement, and such informal arrangements are quite common between the professionals. So long as you are not sharing fees and you are not, you are independent of each other, you may have such associations. But you should not be sharing fees, and you should not be sharing each other's responsibilities. The client should not say that I assumed you will do this income tax work, you have given it to some other person. So make sure that your contract with the clients are very clear that you are rendering only the audit services, and for taxation work, he is independently going to other tax consultant who happens to be informally associated with you.
This question, Mr. Rajendra Prasad says, how to differentiate contract of employment with contract of consultancy in case of CS? I think.
So one way is if he is being paid remuneration and tax is being deducted under 192, it is a salaried employment contract. If the tax is being deducted under 194J, it is a consultancy contract. But the nature of the section in which tax is deducted is by itself not the deciding criteria. So there are various categories. How is he writing letters on behalf of the company? Is he taking responsibilities on behalf of the company? Is he opening letters of credit, negotiating with the banks for or with suppliers? So all those things are to be cumulatively to be seen whether a person is an employee or a consultant. Generally, a consultant will not have an authority to sign. Employee would be doing that. Your employee would be signing the statutory returns required to be filed by the company with different regulatory authorities. Based on all those things, a differentiation can be made.
So CA Sushant Kota, he says, whether a CA can tie up with a website like Taxman and Tax Guru. Most of the time we observe at the end of the article, the website says, if you have a query, we will connect you to our CA. In this case, can we say CA is advertising through e-website?
So this is a very gray area, and gray area in the sense that what is really important is if as a reader you think this is an advertisement, and in such cases one should be again careful, because but if you have written an article and genuinely that article is published by any of these tax professional websites, and if a person has a query and the tax website says, okay, you have a query, I'll connect you to that person. So that by itself does not mean you are advertising. It is a tax company, which is that tax publisher, which is advertising. Suppose you have written an article on tax audit and it is published on the website. Now, some people who have read it have some queries. So the tax website says, I will connect you to the author who has written that article. So you are by yourself not advertising. So make sure that your contract with the Taxman website or the other Tax Guru website which you mentioned is clear that you are not the one who is advertising and you are not falling foul of the advertisement guidelines. And even if you come to know that beyond your contract, the other person is advertising your name in an unprofessional manner, then it is better to disassociate yourself with such. I'm not saying any of these two are doing it in an unethical manner. In general, if any, you have entered into contract, but you find that your contract is being misused, you should step out of that contract.
CA Gopal Rao, sir, is one of the senior members in Kadapa branch, also a committee member.
Yes,
he says, can we participate in open tender or not of professional work?
Not of professional work. So we should ensure that the services which we can render under Section 2 of the Chartered Accountants Act. So we are part of that, those services only. And therefore, if there is a tender for a service which we can render as chartered accountants, then only we can respond to those tenders.
Again, Gopal Rao sir is writing, being a member in practice, can we obtain EPF, ESI registrations for compliance of labor laws?
Generally, I think yes. There should not be a restriction unless the concerned law requires a particular professional, like say advocates, to appear before them. Otherwise, obtaining these registrations on behalf of the client would be in the nature of administrative services, and unless prohibited in the respective state laws, I guess one could render those services to the clients.
So finally, one question from my side. There are a lot of friends in Hyderabad and other parts of AP, Telangana, and South India. These members, they are some of them are members of a networking called BNI, Business Network International.
So institute has said you can't be a member of BNI particularly.
So they are saying, sir, this is not a network as the institute talks of a professional network. This is a sort of a business network where you interact with people and exchange your work.
So the guideline which the institute has given is you can't be part of a network which is not registered with the institute. So I don't think this network being member of this network would be permissible, because there is a lot of advertisement solicitation through those networks which are not permitted under the CA Act. What cannot be done directly cannot be done indirectly is a well settled provision of law. And therefore I would urge members to stay away from such networks.
I think Srinivas Gupta garu, I think we have now almost reached to our end, so we can please.
Naresh, there is one more question from Gopal Rao garu. Being a member in practice, can we obtain EPF and ESI registrations for compliance with labor laws?
नहीं हो गया पंकज साहब बोल दिए, so it's clarified.
Yeah, we have dealt with that.
Sir, thank you very much for spending so much of time and clarifying so many doubts. So I request Srinivas Gupta garu and all the three chairmen to please.
So thank you, sir. Thank you for your elaborated speech on Code of Ethics and which are related to 2009 Code and revised new Code of Ethics for 2019. And you have enlightened us on the revised Code of Ethics and disciplinary mechanism and practical issues as per Volume 1, 2, and 3 of the new revised Code of Ethics, and the problems which they face if they don't follow the Code of Ethics, and what we have to follow, keeping in mind all the professional things. We have to go through this Code of Ethics, and we should be go through this Code of Ethics and follow all the rules and regulations. Yeah. Yes,
following is important.
Following is the important thing, sir. And now, word of thanks by Madam Nagaraju, Secretary of Anantapur branch, sir.
Naresh Chandra Geli Garu, if you permit, there is one last question which I just saw, and I'm taking up that because it is an important issue. Somebody says, can I participate in my capacity as HUF? Friends, if you're Karta of HUF, you're still the same person. So what you cannot do in your individual capacity, you cannot say I'm doing in my capacity as Karta of my HUF. So please make sure. Some people say that I'm involved in the futures and options business in my HUF where I'm Karta. I'm not doing as a chartered accountant. That is one and the same. So if you cannot do it in your individual capacity, you cannot do it in a different capacity as Karta of your HUF. Thank you.
Sir, Nagaraj garu.
Yeah. Well, good afternoon to one and all participants. Honorable Sri M. Devaraja Reddy garu, the past president of our institute and the chief guest of the day, and the guest of honor Mr. Changal Reddy garu and Naresh Chandra Gelli, who are SIRC members, as well as the ex-officio members of the Anantapur branch, Kurnool and Kadapa. And ladies and gentlemen, it's my proud privilege to have been asked to propose a vote of thanks on this occasion. I, on behalf of Kurnool, Kadapa and Anantapur branches, who are jointly organizing this virtual CPE seminar, and the entire supporting team, managers of the branches, and on my behalf, extend a very hearty vote of thanks to the speaker for gracing your important work and sharing with us your findings and opinions today. Our sincere thanks to Mr. Devaraj Reddy, who has accepted to be the guest of the day, though he is in Kakinada on some professional work and kindly accepted to be the chief guest of the day, sir. And it's also a welcome thanks to the members of the SIRC, members who have participated to this virtual webinar, and also for their introductory words, sir. I must mention our deep sense of appreciation for Mr. Manoj Fadnis, the speaker of the day, for his efforts towards new code of ethics and disciplinary mechanism and practical issues. Mr. Manoj Fadnis dealt on the subject in a very detailed and lucid manner, and he has also mentioned that there are 5 changes in this code of ethics as compared to the previous one. One of the main restrictions and one of the main changes that are proposed in this new code of ethics is that restriction on taxation services to audit clients. Though it is deferred, it is one of the detrimental if it is implemented, sir. And another one is that in respect of the fees to be charged or to be collected from a single client, if it exceeds 15% of the total fees, then also the independence is impaired, and also a duty is cast upon that person to kindly TCWG, means to display to those charged with the governance. And also management responsibilities also should not be taken by the practicing chartered accountants. These are the few highlights of the speech by Mr. Fadnis, and we are all inspired by your great words, sir. We are immensely pleased that the past presidents of both of our institute are participants to this event. Thanks to the chief guest, and thanks to the guest of honors and chairman of all the 3 branches, ladies and gentlemen. Once again, I want to state that we are all most grateful to the speaker, Mr. Manoj Fadnis, and thanks to you for being with us this afternoon, and it has been a great pleasure to us. Thanks, and Jai Hind, sir.
It's actually a rare opportunity where we have 2 past presidents coming. It's a very rare thing, sir.
Thank you so much.
Sir, these 3 branches they've been doing for last 3 meetings.
Okay,
Finally,
nice.
they are doing a lot of webinars. Instead of calling for a speaker and addressing each branch wise, so we thought we'll have three branches covering up, and then they are doing together within the institute norms again.
Very good.